Investing in small cap stocks is a strategy that falls in the high risk high reward slot. Small cap stocks, the ones with market capitalization between $300 million and $2 billion, are mostly smaller and less proven enterprises. This means either they operate on a thin profit margin or are not profitable yet, as new businesses take time to reach profitability. However, being a small cap stock is an inevitable part of the journey to becoming a well-established giant with worldwide recognition. Take the example of Apple Incorporated and Google, which were also small cap stocks once. Thus, these stocks have a huge potential for future growth, but then again, not all companies are successful in becoming profitable. The key to finding hidden gems among small caps is considering their underlying business. Therefore, here we have compiled a list of the best small cap stocks with strong underlying businesses to buy in 2023. Up first is a leading online retailer of automotive parts and accessories, CarParts.com Incorporated, which trades under the ticker symbol PRTS, and is based in the US. This pandemic darling, while has lost the spark of early pandemic days, is still delivering solid growth and outperforming its e-commerce peers, while gaining market share from traditional auto parts retailers. In recent months, CarParts.com has continued to expand its product offerings and improve its customer experience. It has added thousands of new products to its website, including a wide range of performance parts and accessories for popular makes and models. Additionally, the company also keeps on introducing new features to its website to further streamline its customer service. CarParts.com has also been focusing on strengthening its relationships with its suppliers and partners. It has signed a number of new agreements with top manufacturers and distributors, which will allow it to offer an even wider range of high-quality products to its customers. The company's financial performance has also been strong in recent quarters, despite the turbulent economic environment. The company reported record sales of $164.8 million in the third quarter of 2022, which shot up by 16% year-over-year. Gross profit also marked a nice increase, going up by 19% to $56.1 million, while adjusted EBITDA grew by a multiple fold to $6.3 million. On the other hand, the quarterly net loss contracted to $0.9 million, against $4.7 million. Overall, this small cap stock is well positioned for continued growth in the coming months and years. With a strong focus on customer satisfaction and a growing product offering, the company is well equipped to meet the needs of consumers in the automotive parts and accessories market. Up next is a biopharmaceutical company, focused on the development of small molecule therapies for cancer and other diseases, Arvinas Inc., also based in the US. The company is represented by the ticker symbol ARVN. It is currently in the clinical stage with 11 active research tracks, including 3 at the clinical trial level. Arvinas has made significant progress in its clinical development programs. Recently, the company shared new data from the Phase 2 expansion trial of its leading drug candidate ARV-471. The drug candidate is being studied as a treatment for metastatic breast cancer in collaboration with Pfizer. The latest data showed a 38% clinical benefit rate and a favorable tolerability profile. Additionally, the other 2 clinical candidates for prostate cancers are also progressing successfully so far, with data announcements and next stage trials in the coming months. Arvinas has also made progress in its preclinical programs, with the discovery of a new class of therapies for the targeted degradation of the KRAS gene. There are currently no approved therapies targeting KRAS, while the company plans to initiate a Phase 1 clinical trial of its KRAS degraders in 2024. In terms of financial performance, Arvinas reported revenues of $30.3 million in the third quarter of 2022, against just $9.3 million a year ago. The company ended the quarter with cash and cash equivalents of $1,276.2 million. Overall, Arvinas is making significant progress in its clinical development programs, with promising results in its prostate cancer and KRAS programs. Furthermore, the stock holds a buy rating and a price target of $81 from Credit Suisse. With a current share price of $34.25, Arvinas is a small cap stock worth considering in 2023. Before we move on to the next stock, we'd like you to know that we offer a morning newsletter to our email subscribers. Prior to the market opening, we send our subscribers an informative email about which stocks are moving or about to move. You will get an overview of key earnings reports, recent insider transactions, analyst upgrades, and downgrades. To take advantage of this offer, you can find the link in the description box. If you're still with us, it means you've liked our video. Do click on the like button to show your support. Following next is a leading producer and exporter of metallurgical coal, which is an essential ingredient in the production of steel, Warrior Met Coal Incorporated, trading under the ticker symbol HCC. The company is based in the US and operates mines in Alabama. It also engages in the sale of natural gas, which is extracted as a byproduct of coal production. In recent years, Warrior Met Coal has experienced strong demand for its high-quality coal, which has helped boost its financial performance. Despite the numerous macroeconomic headwinds, Warrior Met Coal is progressing well and delivering strong financial results. In the third quarter of 2022, the company came out with a net income of $98.4 million, and total revenues of $390.2 million. This compares to a net income of $38.4 million, and total revenues of $202.5 million in the comparable period. Moreover, the adjusted earnings per share of $2.10 came well above the expected $1.61, while the revenue beat expectations by 9.93%. Looking ahead, Warrior Met Coal is well positioned to capitalize on the ongoing recovery in the global steel market. The company has a diverse customer base and a strong balance sheet, which should help it weather any potential economic headwinds. Hence, Warrior Met Coal is a solid small cap stock to consider for investors looking to diversify their portfolio, with a company that has a proven track record of delivering strong financial results. Additionally, the company also offers a quarterly dividend of 6 cents per share. Coming next is a US-based clinical-stage biopharmaceutical company, Dynavax Technologies Corporation, trading under the ticker symbol DVAX. The company focuses on developing and commercializing novel vaccines and therapeutics in the immuno-oncology space. While Dynavax is on track to make money for the second year, the majority of its revenue comes from its two commercial products. One of Dynavax's main products is HEPLISAV-B, a vaccine for the prevention of hepatitis B in adults. The other product is CpG-1018, an adjuvant that boosts the immune response of patients when added to COVID-19 vaccines. Although sales of CpG-1018 could see a significant slowdown as COVID-19 disappears, the company is working on strategies to stop that from happening. It is working on a pipeline of candidates to leverage the adjuvant and ensure revenue generation from it. In addition, Dynavax is also working on several other vaccine and immunotherapy candidates in various stages of development. Furthermore, the company is doing well on the financial front as well, with total revenues of $167.7 million in the third quarter of 2022. The revenue surged up by 55% year-over-year, while also surpassing the quarterly estimates. Moreover, Dynavax came out with a net income of $63.8 million in the quarter, against a net loss of $28.4 million a year ago. The quarterly diluted earnings per share of 43 cents were well above the expected as well. Overall, Dynavax Technologies Corporation is a promising small cap stock to consider for investors looking for exposure to the biotech industry. Its strong financial performance and promising pipeline of products make it a potential growth opportunity. Coming last on our list for today is a leading commercial real estate investment services firm with a strong presence in the United States, Marcus and Millichap Inc., represented by the ticker symbol, MMI. The company specializes in providing brokerage, financing, research, and advisory services to clients looking to buy or sell commercial real estate properties. It has a network of around 2,000 investment professionals, who operate in over 80 offices across the country. The company has a strong track record of financial performance. However, the current macroeconomic conditions have paved a bumpy ride for it in recent quarters. Just like all real estate-focused businesses, soaring interest rates and fear of recession have slowed its revenue generation. In the third quarter of 2022, Marcus and Millichap reported revenues of $323.8 million, which marked a slight decrease of 2.6% year-over-year. While the number of transactions showed a slowdown, the average transaction size and commission per transaction did increase by 18.7% and 6.8% respectively. On the bright side, the company's revenue for the first 9 months of 2022 was 29.7% higher at $1 billion. Moreover, the bottom line for the same period also improved by 19.5% against 2021. Although the present market conditions are proving challenging, the company is still positioned well to mark improvements in the time to come. Furthermore, the ongoing bearish sentiment could prove to be a good entry point for owning this small cap stock before it makes a strong comeback as the market eases up. That's all from us in today's video. We hope the information we provided in this video has been insightful for you in deciding your investment portfolio update for 2023. We would love to hear your thoughts on our list in the comments below. If you want to know about other stocks and the different investment strategies they best fit, please visit our website, stockstelegraph.com.